Comparing Betterment asset classes with alternatives is a crucial step in building a diversified investment portfolio. To begin with, it is essential to understand what asset classes are and how they work. Asset classes refer to groups of investments that share similar characteristics and behave in a similar way in the market. The first step is to identify the asset classes offered by Betterment, which include U.S. stocks, international stocks, U.S. bonds, and international bonds. Each of these classes has its own set of characteristics, such as risk level, potential return, and correlation with other asset classes. Next, compare these asset classes with alternatives, such as real estate, commodities, and cryptocurrencies. Real estate, for example, can provide a steady income stream and diversification benefits, but it often requires a significant upfront investment. Commodities, on the other hand, can be volatile and are often used as a hedge against inflation. When comparing asset classes, consider factors such as risk tolerance, investment horizon, and financial goals. For instance, if you are a conservative investor with a short-term horizon, you may prefer U.S. bonds or other low-risk asset classes. If you are a more aggressive investor with a long-term horizon, you may prefer U.S. stocks or international stocks. It is also essential to consider the fees associated with each asset class. Betterment, for example, offers low-cost index funds with no minimum balance requirements and no trading fees. Alternative asset classes, on the other hand, may have higher fees and minimum investment requirements. To illustrate the comparison, consider a hypothetical investor who wants to allocate their portfolio across different asset classes. They may choose to allocate 60% to U.S. stocks, 20% to international stocks, 10% to U.S. bonds, and 10% to international bonds. Alternatively, they may choose to allocate a portion of their portfolio to real estate or commodities. Best practices for comparing asset classes include diversifying across different classes, regularly rebalancing the portfolio, and considering tax implications. It is also essential to educate oneself on the different asset classes and their characteristics to make informed investment decisions. In conclusion, comparing Betterment asset classes with alternatives is a critical step in building a diversified investment portfolio. By understanding the characteristics of each asset class, considering factors such as risk tolerance and investment horizon, and evaluating fees and performance, investors can make informed decisions and achieve their financial goals.